Hey, Lauren Andrews here from Dominion Lending Center's Expert Financial, OptimumFinance.ca. So I've been talking to you about the shared equity financing program. Okay, so this is a program that allows you to have a 20% down payment when purchasing. So what it does is elevates your purchasing power. You can actually purchase up to $1.7 million home with as little as 5% down, up to $2.5 million with 10% down. Now we still need to qualify with the mortgage as you normally would, but we basically add on a 20% down payment on top of it to optimize what your purchasing power would be. Then I do get a question, so Lauren, when we do this particular program, how does it work? So I'm gonna give you a really quick summary here because I'm gonna talk more about the closing costs here and how it actually works in terms with shared equity financing. Essentially, if I put say 10% down, co-ownership company will put in another 10% down, that makes my 20%. My 10% of that 20% turns into a 50% equity share. What I will be getting from that is as the property increases, let's say increases by 100,000 over a year and I sell it, I get 50% of that. So I would get 50,000 plus all my principal payments that I made towards the mortgage, etc. So I'm not going to get into those details. Those are in another video, but I do want to talk about closing costs. So let's say if I want to kind of give you a scenario. So let's say this couple, they qualify for a purchase of say $700,000. They had $70,000 saved. Now that's not 20% of the down payment. So basically what they would need is an insured mortgage. So that means CMHC or a Sagan will insure the mortgage on their behalf. The bank pays that insurance and puts it into the mortgage for them. So in this particular case, that insurance is $19,530. That gets added into the mortgage. So they're going to start off with a mortgage, $649,500. Then they got closing costs. So I want to focus on these closing costs as well. So they'll have land transfer tax. And let's say the land transfer tax on this one total is $10,475. If they are a first-time home buyer, they will get a rebate up to $4,000. The net land transfer tax they're going to be paying is $6,475. Now, if you're in Toronto, just to let you know, there's an added land transfer tax. Okay, so I'm going to keep that part out of it because in this particular case, instead of $6,475, it would be $12,475. So we're going to assume the property is not in the city of Toronto. So if it's in the city of Toronto, the land transfer taxes are higher. So in this scenario, my total closing cost for this would be the CMHC, okay, so the insurance fees and the land transfer tax, which adds up to $26,005. Here of those fees, the $19,350 gets put into the mortgage. The rest I'm going to be paying the lawyer on the closing. Okay, so that's how that is split up. So let's look at the shared equity financing. Okay, so let's say for now I elevate the purchase price to $800,000. So now with this I have added purchasing power and I'm going from $700,000 to $800,000. Well, that's definitely going to increase my land transfer taxes, or the amount that we owe, because the property has increased. With, again, shared equity shows that I have a 20% down payment. So if I have my $70,000, okay, basically the balance would be put in, because I'll need on a $800,000 mortgage, I would need $160,000 as my down payment. $70,000 would come from me. Co-ownership company would put in the rest to make that up. The difference here is now, so we got a 20% down payment. So that actually gives me a 43.75% equity share in the property. And that's going to come into, that's going to factor into some of these closing costs. That's why I'm telling you what my equity share is right now. What changes? Okay, that $19,350 CMHC fee, gone. It's disappeared because now we have 20% down. There is no CMHC fees anymore. So that's important. So there are fees connected with this particular program. So what we will be looking at is paying 1% of the mortgage amount. So in this case, if we have an $800,000 purchase, we have 20% down, that's $160,000, we'll have a $640,000 mortgage. So that means the lender fee on that is going to be $6,400. There's also an additional fee, $2,500 on top of that, which is a broker fee that's put onto that as well. So my total fees for this is about $8,900. Okay, so we add those together. Now, what is going to be a little bit different here is the land transfer tax. So remember, we've now increased the purchase price. So our land transfer tax before at the $700,000 was $10,475. Now we've elevated the purchase price. Now it's $12,475. What happens now is that equity split, that 43%, I'm only going to be paying 43.75% of the land transfer tax. The co-ownership company is going to pay their portion of the land transfer tax. By the way, this program, you do not have to be a first-time home buyer. It just has to be your principal residence to take advantage of the shared equity financing program. But let's say in this case, you're a first-time home buyer, so you're gonna get a rebate off that. Well, what they do is they'll pay their portion before you get the rebate, then you'll get that full rebate back. Okay, so basically what that means is your actual land transfer tax goes down to about $1,058. That's the portion. So the total closing cost that I'm going to be paying here, that I have to pay the lawyer on closing for this portion of it with the lender fees and land transfer tax, is $10,358. Versus before, it would be what I would have to give the lawyer is $6,475. Okay, so there is a difference what I'm going to pay for at the end of it. So now my overall cost savings by using the shared ownership program, I'm actually going to be saving $15,467 because I've eliminated the CMHC insurance fee, and I've also had a portion of the land transfer tax taken relative to my equity split. Now, are those all the costs that are involved? No, there's also your legal. You got to pay for the lawyer and stuff like that. But I'm talking about the direct costs connected to the actual property. So you got lawyer's fees and maybe some adjustments and things like that. But that is the bulk of what we're looking at. Now, lenders. So when we do lenders, they don't really calculate your exact closing costs. They'll want to see that you have 1.5% of the purchase price in the account to cover your closing costs. Okay, so you got to keep that in mind. That's what they're going to be looking for. Whether you're going to be needing all that or not, that doesn't really make a difference for them. They just want to make sure you have enough to close the property. Okay, so it's really important we understand, hey, what are closing costs, what's involved, and how they're different. This particular program is very popular right now because it's actually helping people get into home ownership years and years sooner than they ever thought they could. Listen, if you have any questions, just reach out. We're here to help. Looking forward to seeing you on the next video.